Hello everyone and welcome to United Asset Strategies Client Quarterly Webcast. I'm joined today by Tom Healy and myself. I'm Lee DeLorenzo, the president of the company. So each quarter we come to you, we talk about what's been going on and what we think is coming ahead, and this quarter we'll jump right in. Year to date we've had strong performance across most asset classes: large cap, small cap, mid cap, America, foreign, and especially fixed income. But in the third quarter, we had a divergence. We had some sectors that were not doing as well as asset classes. So the large cap companies, those that pay dividends in particular, continued to outperform, but small caps actually had a negative return. European stocks of the developed countries had a negative return. And we're digging it a little deeper, you could see that there was a flight to quality going on, and that stocks that paid dividends, as I mentioned, were up, including utility stocks and real estate stocks. But those that were subject to economically sensitive sectors like cyclicals, materials, and energies did offer us negative returns. So we want to look at some of the issues that would be making this happen, and I'm going to turn those tough questions over to Tom. In particular, one of the biggest questions that we have that our clients are asking us today might be one of the reasons. So, is a recession looming?
Great, thanks, Lee. When we look at the economic health of the U.S. economy, we don't look at one data point. We generally look at a framework of indicators. And while we exited 2018 with a strong economy, some of those indicators have turned negative this year. In the last few months, we've seen the yield curve invert in the short end, and the ISM manufacturing data turn into contractionary zone, both of which are recessionary indicators. And after a strong year for corporate earnings in 2018, this year looks to be more neutral, something in the area of 2%, which we think is a fairly neutral indicator for the economy. One of the more promising indicators of late is housing, where the drop in rates has actually reinvigorated the housing market, and we think that's a positive for the economy. Two other areas that are positive are the job market and inflation trends. One of the headwinds that we do have to be careful about in the U.S. is the global economic weakness, particularly in Europe, most notably in Germany, and also the uncertainty around trade and how it impacts China. The bottom line is we don't see a recession as imminent, but many of the data points that we track are suggesting we're heading in that direction.
So there must be some other influences going on, and we can't overlook U.S. politics. So how is that affecting the market?
Sure. Both political risk and also policy uncertainty are creating volatility for market sectors and even specific stocks. Political risk is actually heightened right now owing to the impeachment inquiry. Very difficult to predict the outcome there, but we're watching it closely. What's more tangible is actually policy risk. One example is the growing bipartisan push to reduce drug prices. This is definitely impacting large cap pharmaceutical stocks. This is an area of the market that our team has basically reduced exposure to in the last few quarters to avoid this risk while we evaluate the potential outcome. Another area of concern that we're watching closely is the potential for increased regulation of big technology. Again, the bottom line here is we're watching developments closely, and we're taking what we would call targeted actions as needed to manage risk, but also take advantage of opportunities as they arise.
So America certainly isn't the only country with some political headwinds and with a lot going on overseas. How does the geopolitical landscape look?
Sure. Yeah, there's a lot of risks outside the U.S., including the trade war with China, protests in Hong Kong, escalating tensions with Iran, Brexit, and now military escalations in Turkey and Syria. We see trade talks as remaining fluid, where you have good news one day followed by negative news the next day. The latest is that a delegation from China and the U.S. are meeting tomorrow, and there's some discussion about the potential for at least a partial deal, and that's being cheered by investors today. We continue to believe the president, it's in his best interest to get a deal done, even if it's a partial one, as tariffs are set to go up 45% in 2020, which obviously is an election year and would be a real negative for the president. As for the Middle East, it doesn't appear that the U.S. has an appetite to go after Iran militarily, but we have to watch this closely as it has a direct impact on oil, which also affects the global economy. Again, the bottom line here, there are real concerns around the globe, and we believe that our approach of remaining vigilant, diversified, and tactical allows our team of analysts to take appropriate actions to protect client portfolios from these uncertain risks.
Thank you very much. So being an investor with United Asset Strategies gives you the peace of mind, because not only do we take the tactical actions of moving from risk on to risk off, and changing exposure within the subsectors, but we do the planning as well. And the best defense, we believe, is to have your investments according to the needs that you have. So please, if there's any changes in your situation, please let us know so that we can make the adjustments inside the portfolio. The last quarter of 2019 will be busy here for United Asset Strategies. Next week, we're having 2 college planning sessions here on Wednesday, October 16th. Andy Lockwood will be the speaker, and he's going to share with the adults, the parents, the grandchildren, and maybe even some students will come as well, from everything from essay writing, picking the right college to match the child, the financial planning aspect, and the FAFSA application process. So if you can make it and you're in the Garden City area, please, we're going to be hosting the event right here in our offices. Also, the last quarter we get very busy with tax planning, implementing the strategies to reduce your taxes, defer your taxes. We're very well versed in opportunity zones, and it's not too late to offset some of the taxes with that planning technique as well. Lastly, I wanted to just say that United Asset Strategies has surpassed managing $1 billion worth of assets for our clients. We're humbled by the responsibility that you've given to us, and we take it very seriously. We enjoy our relationships with our clients and look forward to a very prosperous 2020. The next time that Tom and I will be together in a formal webcast, it will be next year. So thank you.